Since India's markets and the overall economy have exhibited such strong performance in the recent past, not only residents but also NRIs are interested in investing here in India. However, NRIs sometimes come across numerous questions and even challenges whenever they think of investing in India. But worry no more, because the GIFT City has addressed these issues of NRIs in many ways. In this video, I will tell you why and how. Let's first understand what GIFT City funds are. On 29 July, Prime Minister Narendra Modi inaugurated the India International Bullion Exchange, or the IIBX, marking it as the country's first exchange of its kind at the Gujarat International Finance Tech City, also known as GIFT City. It's a financial hub and India's inaugural International Financial Service Center, or IFSC. Now, within GIFT City, banks can establish IFSC banking units, or IBUs, to provide global financial services to resident Indians, NRIs, foreign nationals, and businesses. These banking units offer offshore mutual funds, allowing investors to benefit from international markets as well. Now, investors can access and invest in mutual funds across major currencies through this unified platform. Why should NRIs invest in GIFT City funds? Here are some concerns of NRIs that GIFT City funds have successfully addressed. GIFT City funds let you invest in your own foreign currency and withdraw your money in that same currency. Now, previously NRIs were worried about the Indian rupee losing value against the dollar. Since the rupee tends to often weaken compared to the US dollar, it can cut into your returns when you invest and withdraw in INR and then convert it back to dollars. So when NRIs invest in other Indian mutual fund schemes, both the investment and the withdrawal are in INR. Second is taxation concerns. Taxation issues are a major headache for NRIs investing in Indian mutual funds. When NRIs redeem their investments in Indian mutual funds, tax is automatically deducted at source, which is also known as TDS on the capital gains. The foreign country where the NRI resides or lives in also imposes its own taxes according to its own local tax laws. But great news for NRIs. GIFT City funds eliminate TDS in India, allowing NRIs to withdraw the full proceeds without any deductions. For Category 3 alternative investment funds, or AIFs, which include equity funds, capital gains taxes, both long-term and short-term, are paid at the fund level on the shares sold, with no additional tax deducted during redemption. But here's what you should know. Dividend income is taxed at a reduced rate of 10% plus applicable surcharge and cess. Interest income from loans to IFSC units is exempt from taxes. Interest on long-term bonds and rupee-denominated bonds listed solely on a recognized IFSC stock exchange is taxed as follows. Number 1. For bonds issued before 1st of July 2023, taxed at a reduced rate of 4%. For bonds issued on or after 1st July 2023, taxed at a rate of 9%. Transfer of specified securities listed on the IFSC is not subject to capital gains tax. Certain specified funds are exempt from surcharge and cess. Remember, GIFT City funds do not incur GST on fund management and other charges, unlike traditional portfolio management schemes and AIFs. The third benefit that GIFT City provides to NRIs is that they can invest remotely from anywhere. Many of you face restrictions as you can only transact in Indian mutual funds while physically being present in India. Now, this means you can miss out on investment opportunities or perhaps face any difficulties or challenges when you need to withdraw funds unless you are in India at the time. However, GIFT City funds allow you from any country, including the US and Canada, to invest or to withdraw. Now, I'm sure you're interested in knowing about the different kinds of investment options that are available under GIFT City funds. The key participants in GIFT IFSC are international stock exchanges, IFSC banking units, brokers and intermediaries. You also have insurance companies and asset managers. Now, there are 68 Category 3 AIFs available at GIFT City. But as of now, no retail funds or ETFs have been approved. Now, here's the list of a few investment options. First, you have alternative investment funds, global equity market bonds. You also have term deposits, rates, equity investor in startups. So all these options are available for you. Now, there are a few things that you must consider, you need to keep in your mind before investing in GIFT City funds. Right now, all GIFT City funds use the AIF or Alternative Investment Fund structure. Now, this requires a minimum investment of $150,000 per fund, meaning you need to invest a large amount in a single fund. Unlike regular portfolio management services, or as we call them PMS schemes, which let you invest up to 5 million rupees in a single account with a mix of strategies. So you need to have a financial portfolio of at least $150,000 if you want to invest in GIFT City funds, allocating about 10% to these funds. Otherwise, investing a smaller amount could result in high concentration risk. The minimum investment amount can be as low as $100 for the newer funds. Let's take a look at the documents required for NRIs to invest in GIFT City funds. Of course, you need a valid passport. A valid visa or work permit is necessary to confirm your NRI status. The next thing on the list is proof of residence outside of India, which is definitely required. Indian address proof if applicable. If you have a residential address in India, proof of this address should also be provided. Recent passport size photographs, your PAN card. NRIs must have an existing NRI, which is non-resident external, or FCNR, which is foreign currency non-resident account as well. Details of these accounts are also required. Now let's quickly recap all that I shared with you in the video. GIFT City funds have made it easier for NRIs to invest. How? Well, they allow you to invest in your own foreign currency and withdraw money in that same currency. Previously, NRIs were worried about the Indian rupee losing its value against the US dollar. GIFT City funds eliminate TDS in India, allowing NRIs to withdraw the full proceeds without any deductions. GIFT City allows NRIs to invest remotely from anywhere in the world. The key participants in the GIFT IFSC are international stock exchanges, IFSC banking units, brokers and intermediaries. You also have insurance companies and asset managers. Currently, all GIFT City funds use the AIF or Alternative Investment Fund structure. This requires a minimum investment of $150,000 per fund. Now, do remember that conducting thorough research and the benefits of professional guidance can help you go a long way with your investments. Hope this video was of help to you all. If you have any more questions, feel free to drop them in the comment section. And before you go, please note and remember that this video is just for educational purposes only. Any information mentioned here in this video is not an endorsement or an investment advice. Do not forget to hit that like button and subscribe to Groww NRI. Many thanks for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.